Hey everyone, welcome back to the Deep Dive. We know you want to get right to the point and figure out what we can expect during tonight's London session for those NASDAQ futures. We're going to use smart money concepts and take a look at a few key factors, and hopefully that'll give us some sort of edge going into tonight.
Right, we're going to be doing a deep dive into this smart money forecast report, and we'll be trying to give you guys a directional bias and some levels to watch for the NASDAQ futures, specifically that June 2025 contract, the ticker's NQM25. And this is all based on the close of the U.S. session yesterday on March 25th.
So yeah, we're laser focused on the NQM25 contract, and we want to give you a clear, actionable forecast for the London session. So first off, what can you tell us about the close of the U.S. session yesterday from an S&P perspective? What are the key takeaways that we need to understand?
So the NQM25 closed yesterday around 2517.25 according to the CME group data. So that's going to be our starting point. And the NASDAQ 100 index closed higher yesterday. It was fueled by gains in the big tech stocks like, Apple, Microsoft, all those big names. And this bullish close, suggests a potential break of structure on the lower time frames. So it's hinting at continued upward momentum heading into the London Open.
But the index didn't exactly close at its highs for the day, right?
Mm-hmm.
It did pull back a little bit from those intraday highs.
Yeah.
So how should we interpret that through the lens of SMC?
Yeah, so that pullback from the highs, that's an interesting one, because even though the index closed higher on the day, it does show that there was selling pressure at those higher levels. Maybe some smart money, taking profits after that initial rally, or even perhaps initiating some short positions. So we have to consider that those highs, around 2580 to 2600, could act as resistance going forward.
Interesting. So a bullish close, but we have that warning sign in that pullback from the highs. So let's shift our focus now to tonight's London session. What are the most important SMC levels that stand out based on that U.S. close?
So I think a few key levels to watch would be, well, first off, near the U.S. close, we have a possible bullish order block forming right around that 2500 to 2520 zone. That's on the lower time frames. If we see price retrace back down to that level during the London session and we see some rejection there, maybe some bullish candles forming off that level, that could be a good area for support to come in. And then on the flip side, we have those U.S. session highs like we talked about, up around 2580 to 2600. If the price pushes up to that level, it could act as a bearish order block, potentially leading to a reversal.
Got it. So order blocks near the close and at the highs.
Yeah.
Makes sense. Now, what about fair value gaps? Where could those come into play during the London session?
Yeah, so that run up into the U.S. close yesterday, that probably left some fair value gaps above the closing price, right? And those gaps, those imbalances can sometimes act as magnets for the price. So if the London session opens strong and that bullish momentum continues, those FVGs above the close could be targets. Of course, the opposite is also true. If the London session starts with a move lower, we might see price revisit those fair value gaps that formed below the U.S. close earlier in the day.
Right, so it could really go either way with those fair value gaps. Now, shifting gears a bit, we know that liquidity is a huge factor for smart money traders. What are some of the potential liquidity pools that could be targeted tonight during the London session?
Well, when we talk about liquidity pools, you always got to think about stop loss orders. Those are like honey to the smart money. And a classic area for stop losses is just above the previous session's high. So in this case, traders who shorted the NASDAQ yesterday might have their stop loss orders sitting just above that U.S. session high, right around 2600 or so. Now, if the price pushes above that level, it could be a quick move, what we call a liquidity grab, just designed to trigger those stops before the price reverses back down. And the same logic applies to the other side of the market. The U.S. session low, around 2450 or so, represents another pool of liquidity where stop loss orders from longs could be resting.
Okay, that makes perfect sense. So we've identified some key SMC levels. We've talked about those potential liquidity pools. Now let's bring in some real-world events that could create volatility in the London session. What should traders be aware of?
Yeah, so even though it's outside of the typical London hours, we do have earnings reports coming out from a bunch of U.S. NASDAQ-listed companies, and those reports are due before the U.S. Open tomorrow, March 26th. So even though they're released outside of London hours, any big surprises from those companies, names like CTS, PAYX, DLTR, CHWY, and others, that news could definitely influence sentiment when London traders come online.
Definitely, those earnings reports can have a ripple effect.
Right.
What about the economic calendar? Anything important happening during the London session that traders should be watching?
Yeah, so right at the London Open, we have the UK inflation rate for February. That data is coming out around 7:00 a.m. GMT, and the forecast is for inflation to hold steady at 3.0%. But this inflation data, it's a big deal. If the actual number comes in higher than expected, that could trigger a risk-off move in the markets, and that could definitely weigh on those NASDAQ futures. So we'll have to see what happens there.
Okay, so we have UK inflation right at the open,
Yeah.
and that could set the tone for the entire session. What about later on in the London trading day?
Well, later in the day, we have a couple of U.S. data releases that could be worth watching. The U.S. durable goods orders for February are coming out around 12:30 p.m. GMT, and then the U.S. new home sales for February are scheduled for around 2:00 p.m. GMT. Now, those releases are generally considered medium impact for U.S. equities, so we'll see how they play out. And also, we have the U.K. spring statement coming out on Wednesday, March 26th. That's tomorrow. And if there are any major economic announcements during the London session as part of that statement, well, that could also create some volatility in the market. So we have to be prepared for that.
So it sounds like it could be a pretty busy London session with the UK inflation data coming right at the open and then a couple of US data releases later on. Now let's try to synthesize all of this, taking into account these key SMC levels that we've identified and all of these potential catalysts. What's your overall directional bias for the NASDAQ futures as the London session gets underway?
Well, if you look at the way the U.S. markets closed yesterday, that bullish close, it does suggest that the initial bias for the London session is probably going to be bullish as well. But we have to be cautious because that UK inflation data is a huge wild card. It could easily change the entire outlook for the session. And that's why we need to watch the price action closely, particularly around those key SMC levels, to really get a sense of where the market's going.
And in terms of price action, what kind of price range are you thinking about for NQM25 during tonight's London session?
Given everything we've discussed, the UK inflation data, those potential catalysts, I think a reasonable price range to consider for NQM25 during the London session would be somewhere between 24.50 and 26.50. But keep in mind that this is just a preliminary estimate based on what we know right now. The actual price action could obviously deviate from that range depending on how those events unfold and how the market reacts to the news and that all-important UK inflation data.
Okay, so a cautiously bullish bias, but with a pretty wide potential range to account for the uncertainty. So let's say our listeners are looking for specific trading opportunities during the London session using SMC. What are some potential scenarios they should be prepared for?
Sure. So let's say the bullish scenario plays out. In that case, you want to keep a close eye on that potential bullish order block that we talked about down near 2,500, right? If the price pulls back to that area and you start to see signs of buying coming in there, like bullish candles forming, strong rejection, that could be a good spot to consider a long entry. And then for your profit target, you could aim for those fair value gaps above the close or even the U.S. session highs up near 2580. And of course, you'd want to place your stop loss below the low of that order block just to manage your risk.
And what about a potential short trade? How would that setup look?
All right, so for a bearish scenario, we need to watch that U.S. session high, around 2580. If the price rallies up to that level but fails to break through and we start seeing signs of rejection there, maybe a bearish engulfing candle forming, that could signal a potential short entry, especially if it coincides with some negative news or a hotter than expected UK inflation print. And then for your targets on that short, you could look at those fair value gaps below the close or even that longer-term support level down around 2090, and your stop loss would go above the high of that bearish order block.
Okay, so we've covered longs and shorts. What about those liquidity grabs? How should traders approach those using SMC?
Yeah, those can be tricky, but also potentially very profitable. So what you want to watch out for is a sharp, quick move above the U.S. session high, like above 2,600, or a sharp move below the U.S. session low, like below 2450, right at the start of the London session. Now, if you see that happen, and then the price immediately reverses and starts moving in the opposite direction, well, that's a classic sign of a liquidity grab. And it can present a really nice counter-trend trading opportunity. So, for example, let's say the price spikes up above 2,600 right at the London Open and then immediately gets slammed back down. That would be a strong signal to consider a short entry.
So it seems like the key takeaway here is that no matter what direction we're anticipating, waiting for confirmation and managing our risk are absolutely crucial.
Couldn't agree more. You never want to jump the gun in these markets. It's always best to wait for that confirmation from the price action, manage your position size appropriately, and always, always use stop loss orders. That's how you protect your capital and stay in the game.
Okay, so let's quickly recap for our listeners who are getting ready to trade the London session. The initial bias for the NASDAQ futures NQM25 is cautiously bullish based on that strong U.S. close. and we're looking at a potential trading range between 24.50 and 26.50. But that all-important UK inflation data could change things very quickly, so keep a very close eye on that. And of course, you want to watch the price action carefully around those key SMC levels, especially those potential order blocks that we discussed, and the U.S. session high and low. All of that will give you clues as to where the market's headed.
Exactly. Think of this deep dive as a roadmap, a framework for your trading. Now it's up to you to execute. Watch how those levels play out and see if you can identify those high probability trading setups that align with your strategy and your risk tolerance.
Awesome. Thanks for breaking all that down for us. And to our listeners, one final thought as we head into the London session. How might that UK inflation data confirm or invalidate the short-term bullish momentum that we saw in the US yesterday? What specific price action would give you the most conviction in your analysis and your trades tonight? Food for thought. Thanks for joining us, everyone.